Hey, Jonathan York, Back Financial Partners, looking at investment markets. Pretty strong jobs data coming out of the US. That coupled with the Senate finally passing the 1.9 trillion stimulus package has really given the markets a pretty major boost. Now that boost was really come on the back of some pretty nervous times, with the 10-year yield getting above sort of 1.6. Now if you look back sort of October, November last year, that was trading around 0.86. That's a pretty major move. But maybe the sell-off was sort of expected. You know, November last year was the best month for 47 years. It certainly was a bit of profit taking out there and a bit of sort of a sort of rotation out. Tech stocks have really been hit pretty hard, but then after the sort of huge rise last year, that was maybe to be expected. Comments from Fed Chair Powell as well were a little bit concerning, you know, talking about inflation sort of picking up, and that's certainly going to be the case as the economy does gradually reopen and, you know, that sort of pent-up demand does get spent. Because latest surveys appear to sort of suggest that the US consumer has around $1.4 trillion of savings. So really it's just getting the vaccines rolled out. Certainly the US is making some reasonable headway out there, but there's still a long way to go. Just on the COVID front, I mean, Brazil seems to be suffering the worst at present. Their ICU beds are 90% occupied now. And with little signs of the virus being getting under control in Brazil, it really does present some pretty major problems. Now, oil on the back of some geopolitical issues and further sort of talk out of OPEC about not increasing supply has really seen oil sort of push on and is just above that sort of $70 now on Brent. That again is potentially inflationary pressures coming into the economy. Pretty major milestone in the UK. Schools reopened this Monday, and for some of these school kids, that's the first time they've been to school in a year. Now that's all part of the UK government sort of gradually getting out of lockdown and sort of the roadmap to sort of reopening the economy by hopefully sort of June, July time. And certainly they're making pretty good headway on the vaccines. Probably about 30% of the population has now been vaccinated. The major issue in the UK and also Europe as well, and it's sort of a global phenomenon again, is that you know, many countries are getting sort of lockdown fatigue. People are fed up with being locked down. They want to just get out and you know, get back to a more sort of normal life. That certainly seems to be the case in Europe as we're starting to see an upsurge in cases again. Now that's really on the back of sort of now that the vaccine is here, many people feel that it's now safe to get back to a more sort of normal life. The vaccine will cure everything. That is not the case. In Australia, still making some pretty good headway with the virus. Vaccines are slowly being rolled out. And just announced today that the sort of Trans-Tasman bubble, one way now, if you fly from New Zealand into Australia, you will no longer need to quarantine. Now that's obviously good for the Australian economy. Unfortunately, it's not a two-way bubble at present. Coming into New Zealand, you still have to quarantine for 2 weeks. Now here in New Zealand, Auckland finally came out of the level 3 down to level 2. The rest of the country is at level 1. Auckland, hopefully with no more community cases this week, will then go down to level 1 at the end of the week. Now that is obviously good news because it does get the economy up and running. Hospitality is able to sort of reopen in Auckland, and that does make a huge difference. Because certainly businesses, especially in Auckland, are suffering pretty hard on the back of these recent lockdowns. And really is needed because you know, the New Zealand share market certainly in February was one of the worst performers. Down over 6% on the month. But the main sort of detractors really were the Powercos, sort of Meridian, etc. But they saw a huge spike in prices on the back of the purchases from ETF funds. And now that buying has stopped, the price has dropped back. But as with the US, there's been a pretty big move in interest rates in New Zealand as well on some of the longer dated bonds. You know, you're seeing some pretty major moves there for at least sort of 0.5% on the upside. Now in this low interest rate environment, you know, it is pretty tough out there looking for income. One of the major high street banks has got a 5-year term deposit of 1.75. But you know, if you are looking for income options, there's plenty of alternatives available out there. Go to the website www.bayfinancialpartners.co.nz. Follow lots of interesting articles, and we look forward to speaking to you soon.